Good people, how are you? Yes, good to be back with you. It's Crypto Sniper. Thank you for all your lovely likes. We made 100 just about by Nick. And we are got 300 of you already just about right from the get-go. So I've got amazing talk for you. I'm going to tell you some good news. Overall, we are bullish. That's right. We are bullish. We think your low is in. The low is in. We've thought, we've studied, we've vacillated, we've messed around, and we've called the low is in. We don't always do that, by the way. As a couple big reminders, there are some big calls that we've made previously. This was live streaming actually the weekend before Bitcoin fell from 6,200s to 3,000s. We called short on that. It had the structure that we were looking for downside. So we kept sticking our neck out. Mike Novogratz and everybody else was saying, no, it's all over. The bottom is in. The long bear is over. So we don't do these things. We don't call turns and first steps in new moves. It's not our natural position. If we feel we've got good continuation structure, we will stay with continuation to the downside. There are reasons why we are going to tell you today why we think the low is in. And in actual fact, other things I'm going to tell you that are going to be kind of useful for you is that you can almost go straight away to your best alt performing projects. Normally, when we have a real setback, you have to wait for the God market, which is Bitcoin, to turn and let everybody else go. And Bitcoin runs first. It's the grand dam of the madam. It goes through the door first. Everyone has to stand back and wait and twiddle their thumbs. That's typically what happens. This is halftime oranges. We refer to the phrase as it's halftime oranges for your bull market. And what's actually happened is you've had your first significant setback. Now, in any other markets, by the way, 20% is already a correction, and even on equities, a new a bear market, and from the highs, 20%. People need to understand how and why crypto is better. It's one of its core characteristics is the fact that it's far more volatile. So it throws it up much quicker, and therefore, as a result, its throwdowns are a lot harder. So the volatility is extreme, and making a call that it's a bear market. I'm talking about the macro view. When we're looking at 2-day, 3-day, weekly charts, macro view, we are in a bull market. We are still in a bull market, despite a 55% downside correction, and we expect more and higher numbers to come. Now, others have been saying one more dip to come, one more dip to come. We'll touch in on that. We don't feel so. In other words, we're stocking back in collateral after I've gotten stable coin. Remember the cautionary to go stable coin, bit of a dark shadow over crypto. That was the precursor to the big head and shoulders calls. We got some calls we can show you. That was quite recent. Most of you that have been following for a while will know that we were there. And that turned out a great one. It saved a lot of pain on the downside, providing you didn't also put a Ripple trade on at the same time as I did. But nonetheless, largely it was the correct call. Now that has played out. Why will we just stop? Because head and shoulders can be secular. They can be end of trend, and it could be a long bear trend. And you go into maybe a mini version of 2018. Why are we saying no? Well, because the adoption cycle is, so there's fundamental and there's technical reasons. The technical reasons is we have a first cup gold nugget macro 2.5 year pattern. This is not going to be over in a hurry, the bull market that is coming. So in terms of macro cycle, we are macro bull. You will be going higher. You will be going higher. So everything is corrective. It's not really a bear trend. The bull, it's a macro bull. On lower time frames, you can call it a bear trend, providing you're being specific and saying on the lower time frame. But in truth, it's a correction. Despite it being 55%, it's still a correction in the macro bull. Let's take a look actually at that Bitcoin chart and start telling you the good things we're going to tell you, and why we also think you'll be able to get into your alt sooner, and how and why those that think there might be another dip might be wrong. Although, as ever, when you're talking about the future, we ourselves can be inaccurate. We are pinning our colors to the bull mask. So those of you that remember, let's have a little look at this. We've done a few videos, one of which we spoke of the commitment of traders report. We'll be showing you more on that. By the way, we're looking to build a resource. We're just finalizing it, and I'm going to be giving that first then to my community members, but in time we might roll that one out free and put it in the TradingView links, and then you can all access it. We'll show you how those signals are played out. But this is your first cup gold nugget. Macro setup. And it took from the top, little bit of, we always go back to the big time frames. When people are uncertain, remember, you start to watch 5 minutes, 15 minutes, and every little twitch is significant. You have to take a deep breath and go back up to the big time frames. Oh, where are we? Let's remind ourselves where we are. Because you get a little bit sucked in. Look into my eyes, fantasize, hypnotize, woo, into the big vortex, and down you go. So what you have to do is say, where are we on the map? Again, let's remember, what continent? Continent bull, macro, first cup, big bull. Did we make our target? Yes, particularly. When you look at this chart divided by gold, it was beautiful, by the way, for target made. It came up there, the targets in terms of gold. Remember, gold is kind of another anti-fiat global god market for anti-fiats. Bitcoin is the god market for cryptos. But in actual fact, in the larger anti-fiat group, we should also be looking at the market caps of gold and silver and Bitcoin and all the total crypto as a larger anti-fiat category. It would be a very interesting chart to create. Anyway, not for this lesson, but for what we're doing here right now, we're in a macro bull. So you did so much, so fast, so strong, and you went from literally our second most important little squeezy Japanesey that was round about the back end of last year. You've got to remember that this thing had only just properly got its shoes on in October, November properly, and next thing you knew, you were over here in back end of March going, or maybe it's back end of April in fairness, and you've already in very short time, 5.5, not even a full 6 months, had run from 10,000 to 65,000, 6.5 times. So well done. That's awesome. And you participated in it. Then we got our head and shoulders that showed up and started playing a few tricks, and we could see that there was loss of momentum. So let's take that off. We'll drop into this area a little bit more. That was where you started to get the rising wedge. In fact, I'll do that when we drop time frame. I want to first show you these signals before we go. So COT, let's talk about commitment of traders. A real special weapon. So some of you might not be even interested in trading. You think, I always lose money when I trade. I always do bad value. I don't want to learn your HVF method. I don't want to get better. I feel I always have to be active if I'm trading. I can't sit on my hands ever. It's much better I just be an investor. Well, if you just wanted to be an investor and make 3 decisions a year, you could just use this commitment of trader report call. So this is how it's done. Long over there, it would have got you in. The short there, a little early. The long there, short, first a warning and then a short, that's in the orange. Long again there, long again there, all the way. And you got your long signal again now. Where did that all come from? I'm just showing you the signal entries. It all came from our assessment on commitment of traders, which looks at what I call the insider. So the hunt take on the Bitcoin COT data is the insider part is the most interesting. The 4 largest sellers and the 4 largest buyers. So we did a big breakdown on that on other videos. So I'm not going to go on too much. I'm just showing you the signals here. And as I say, we're looking to develop something and it'll be rolled out in time once we're happy in what we've done with it. But this is a very powerful indicator and it's given the long. It is because you only get data once a week. It is not a 15-minute, an hourly or a 4-hourly indicator. It is the macro accumulate because it's released, I think, every Friday and it comes out and then you sit without any data. Imagine you only got a weekly price chart for Bitcoin and it was one dot plot and you went and that was your last freshest data. It was aging and then someone called you up on Friday and told you what the new Bitcoin price was 1 week later. So you've got to understand, you don't trade short time frame off of that. You still have to get in. So in some senses, you might have felt that's a little bit early. It's a dynamic. That data is changing all the time. They just release it weekly. And what was happening, your sellers, your largest 4 sellers were reducing immensely post the big sell-off that occurred there. And in actual fact, the largest 4 buyers were accumulating. That is your insider. The biggest people are your insider money. That is all NSA type people, insider control structure, all the stuff I talk on Reset Sniper, that is them right there. Go with that, not Mr. QAnon psyop on Reddit telling you it's going to 25K. Still could happen, he still could be right, etc., etc. But in terms of what I'm doing, that's what you want to do. You want to leave that nonsense out. So, okay, so that shows you. And by the way, as another key thing, because Bitcoin's God market status in crypto generally, even if you change this to your favorite alt, it's actually an incredible signal provider. So let me just put on Ethereum, and you just see the trade calls again over here. Look at how it's panned out. Again, it doesn't change the accuracy. In fact, it's almost better because in the beginning, Bitcoin ran first. You got even closer to the low post-COVID. You got your warning, and then you got your short right at the high there. Look at that long and short. These are great, great indicators. Calls. Look at that long, and you've just been, without a new short, called for a long again after a major move on Ethereum. This is a great set. This is your insider treat on your favorite alt, and this is the Bitcoin cot. Remember, we will get Ethereum futures data, but it'll take a while to set down. But even if you apply this on BNB, anybody else, you're going to find that even the Bitcoin cot, because it runs first often, is a great signaling option for you to have. So stay in touch with us in terms of what happens there. So reason number one, Bitcoin is not going to drop to 20,000. We think, and we can be wrong. Reason number one is commitment of traders is never that wrong. It never comes in and calls a bottom only for it to go lower. It didn't do it there. It didn't do it there. It's got a 5 out of 5 record. In fact, with your longs, it's 4 out of 4. And your shorts, it's 2 out of 2. That's 6 out of 6 record for giving you great significant moves. And these are pretty big, guys. So just to highlight, the shorts, to get an expanding crypto market right on shorts is bloody tough. 295 Ethereum, you're buying it back. 129. Again, a short up there. Again, around the 295, buying it back sub 100. These are big shouts. It called the COVID. So those insiders, they seem to know something about that. Who knows? Who knows? Just wondering, just whatevering. So that's the same data of Bitcoin shown on other alts, which will be proved very useful. Should we do one more? Maybe we can do Ripple. Ripple underperformed for a long time, and then started to catch up. And then it also had its little legal problems with the SEC. So let's throw one more in on the same Bitcoin indicator and see how it did. Because I'm actually interested in ADA, Ripple, some of the big majors. And you can see how those indicators. So even in a sinking market for Ripple, long, short, long, short, long. Brilliant trading. It's brilliant trading in a new long. Remember, that's data specific as the data came out. So it's not an immediate entry. It's get long. So the fact that that came in as we were selling off was the beginning of the pinch. So very good. Very clear. So that's point number one. Why else are we not running? Well, 55% is a substantial corrective move. It is a substantial corrective move. We are in a macro bull. Do we really need more? Was there sufficient liquidations with 770,000 accounts being liquidated? Has all the spec money probably been flushed out of the system? I would absolutely and arguably say yes. It's my assessment that it has. Very brutally, in fact. So let's just show you. Was it well signposted? I think it pretty much was. So we started to see marginally higher highs. That's what we teach you on HVF method. By the way, non-farm payrolls, our live trading day on traditional markets and crypto markets will be this Friday. Crypto trading with me. Come and see how we talk about the markets, the trades we will take for an hour and a half on cryptos half-hour break, and also we'll see the data number come in on trade the traditional markets. Very interesting time. Oil, silver, gold, also anti-fiat, don't forget. So a larger anti-fiat, big commodity boom. Every time you hear the talking heads talking about a major big commodity boom, you should smile and nod. Those are your friends. They correlated to you. They are pointing to fiat devaluation, and your friend Bitcoin, ADA, Ethereum, Uniswap, you name it, are all going strongly up when that happens. So it is of interest. It is more than peripheral interest, and you can come and join that and trade. Equities, wow, AMC, the one we called, wow, it just absolutely moonshot. It's better than a crypto trade at the time that Bitcoin was going down. So it's very, very useful. Silver and gold were strong when Bitcoin were weak. So whilst they are part of the larger anti-fiat and broadly they both go up, they kind of like tag team wrestlers beating up fiat. First it's Bitcoin in the ring and he's just slapping fiat up, something awful. He gets a bit tired and he takes a rest, and then in jumps Mr. Gold and he starts pounding Mr. Fiat in the center of the ring for a bit, and then Bitcoin's one of the biggest. He's ready to come back. He's got his breath back. So it's like tag team wrestling. So they have, within being correlation and broadly heading up for the macro, they have a slight anti-cyclical event when they're at their most strongest. So it balances out your portfolio. Have a stable, not just the fastest horse, is our story. Rising wedge, big break there. Secondary structure. We called a bounce here. It went look one way, marginally lower low, and went up, and we caught that rally. Another wedge into your head and shoulder. So a lot of guys on the fibs, I don't think they do the fibs correctly. I was watching three blokes all coming together, known YouTubers. I didn't think that the fibs were being correctly reflected there. So let's show you. If you want to do Fibbo analysis, let's do it and show you how it all worked in terms of our take on the correct implementation of this tool, because we're learning while we're growing. But at the same time, recognize that patterns is probably one of your biggest gifts. So if you go from the very top, put your lock on there, grab it, down, low, and to the highest point. The highest point was probably there. So what you'll notice on this fib, and I've left it in regular scale for you. This was perfect. So this 20, when we drew this head and shoulders and we selected that neckline, we had one or two other candidates, but we came back to our original and favorite. 47.5 is your neckline. Remember that number. I expect we will go back and take it in due course in quite short succession. So you had this pausing and this bouncing on the 47.5. Notice also that that size down leg from the very high to the low, when triggered back down, 61.8 gave you basically the neckline, and 1.61.8 gave you our target. Of 30K to be traded, and you ended up trading 29.1, a perfect low with a major snapback rally. So can you see that? That's your fib analysis for you. In fact, if you do a basic fib and you have a look at just a grid fib as well, you'll see how that 61.8 captures the high there. So when you had your shoulder, if that's 100, naught, your 61.8 captures you the high of the shoulder rally. So that was actually one of the best shorts you could have taken. And not claiming that. It's all very much easier in retrospect. The rising wedge selling there. Break, return move, spill to the neckline, some support on the neckline, spill, wind up continuation, spill, target made. Shorts perform even faster and better than longs. That's how it goes, guys. It's one of the hardest things to do. It pays you fastest of all of them. That is how it works. Shorts pay even faster and better. And Bitcoin had been showing this fatigue. It's a very good thing to have got this out the way. That's why it's halftime oranges. It's broken, it's had a rest, it's had a cup of tea and some oranges, and it stretched its legs, and it will be better and ready. So we're going to go into this current mess that I've got here on the lower time frame to assess why I say not down. Now, there was a risk with this, and that's why we were a little bit vacillating. We thought it could be up, could be down. We were waiting to see how heavy it was. We needed new information. So now we are in the bounce low. There's your target run. This is volume by price. So a little lesson for you all. You want to see the volume by price tapping on the floor or tapping on the ceiling, depending on where it's likely to go. So we wanted to see, is this going to be a low slung structure? And also, where's the skirmish? Where is the front line? The buyers and the sellers. It's the Bolsheviks versus the Nazis. And there's a front line where the battle is happening. And that's where all the bodies are stacking up and all the shooting is happening. But there's always soldiers behind on both sides. And there's a degree of interaction as well. Some people slip through the lines, advance parties. But most of the fighting is at the front line trenches and the no man's land. Where is that happening in terms of the price? Where is all the distribution going on? Well, you have a lot of buying and selling. The 70% is in the dark over here. And that is through the 40, up to the 40 and just through. And the lower half is 35. So you're talking about the 5K that sits between 35 and 40. It's not leaning on the floor. The volume by price is not heavy here. It's not leaning on the floor. It's not stacked up there. It's somewhere in the mid. Now, if I was expecting this to be a continuation pattern to the downside, which was the risk, another thing that I saw on another channel on someone using a name very similar to me was saying Bitcoin was an inverted head and shoulders. That's also, unfortunately, not correct. Always feel obliged to correct some TA that's not being done correctly. This is not an inverted head and shoulders. If you have a plot that trades lowest down here, that cannot be a head if you have a shoulder that's traded lower, even though you have more candle time and body down here. It's not accurate. It's just not accurate. The problem you had with Bitcoin that was making it tricky for us is that this was your exhaustive low and this failed to make a new low. It would have been much better for us if we got a marginally lower low initially. We had to keep the possibility of this turning into a continuation pattern. See that red line drawing up along there? We could be setting up for a continuation pattern. And it doesn't matter that it did inverted head and shoulders on ETH and all the others, that they squeezed out a lower low here, because this one is your direction God market. At the key transition points where you're making a determination on direction, the most important chart for you, doesn't matter how beautiful a pattern you find on Ethereum that's an inverted head and shoulders, if Bitcoin isn't, and it's a downside continuation possibility, you have to back the hell off. Because trust me, if Bitcoin goes down, it drags them all down. If Bitcoin was to lose its way, and the targets for these, which are still possible, but less likely in our view, are still down to the low, below 25K, to the low 20s. That's a massive percentage drop from even these levels, which have already had a 55% drop level. It doesn't matter what pattern you have on your shitcoin, altcoin, major, whatever the case may be. Generally, this is going to go down. There's been very few exceptions, very few. There are a few. Hex has done quite well during this period. There were other tokens that have done fairly well. Matic held up quite well and rallied, but it's very unlikely you happen to be in the one that's currently doing great. Okay, so that's point number 2. So we gave you, the COT is never that early that it's a bad call. That was point number 1. Point number 2, volume by price is actually showing us having a bit of a brawl somewhere in the mid-upper section of this continuation pattern, which is less consistent with downside continuation than when you are leaning on the floor. Let's take that away. We had this head and shoulder. So let's give you point number 3, why we think this is going to turn into a first structure in a new trend. Let's continue. So you've given you 2 reasons. So you had a small head and shoulder here that we drew for you and a neckline like that. And that was at the 37,500. Logical round number. We drew that target over there. That's when you triggered and that's where you're coming down to. that performed. But there was no further downside follow through. So you get pattern performance, which is good for the bear case, but no further follow through. And since then, you are rebuilding upside structure. So it's also showing dissipation, lack of overperformance and dissipation. What happened after that low? Well, actually, I'm now going to show you a different piece of TA that's already in there. We have a bearish pole. And we have that, marginally lower lows, and it's essentially a descending megaphone type structure with marginally lower lows. So bear pole and descending, it is hammering out a low. This is typical of reversals. For it to be continuation, we would have wanted the megaphone to be ascending like that, and then we would have expected a breakdown. Kind of like a bull flag and a bear flag, similar rules. So if you have the flag should always be in the opposite counter trend, a weak counter trend to the original impulse. If you keep selling off, but now you're skating off and there's a couple of bumps, you're starting to hammer out a low. You're starting to hammer out a low. So the call is hammering out a low here. Now you'll also see gray line. So forget the red head and shoulder that was part of that pattern now for a while. Now you'll see possible a new neckline that is very similar at the 37,000. So the key levels that are coming through here is 37 and 37.5. This we're calling a new inverted head and shoulder potential. So you have left shoulder, note your action here that is occurring. Complexity in that right shoulder, that's your last time. Pit 1, down you go, target run, rally, attempt to make a new low, fails, higher low, rally back up to the neckline. That is a W head on a complex left shoulder. You've already got your pit 1, you now have your pit 2, second armpit. What do we expect? And this comes into how do you get into your favorite alt projects if we're to be accurate and to say Bitcoin's low is in, my friends, we're done. If we're to be accurate on that point, which is what our hypothesis we're putting forward, how do you just go and rush and buy your favorite alts right now? No, there should be a possibility that there'll be some reaction to this 37.5 level. We've discovered that it is a very interesting level, this range over here. There's been a lot of zipping and bouncing either side of it. And then when you leave it, you capitulate through it. You either support or you capitulate, support or you resist. And at the moment, we're coming up and we're resisting. So we look for a small dip of some sort, maybe even to the 35,750. We'll see. Doesn't have to go that far. We look for the final right shoulder because I think the head is going to be complex. I think the head is in fact this W. I don't think this is your right shoulder because you never met the neckline. That was your neckline. You need to learn how we deal with complex head and shoulders. It's part and parcel of our core contents recorded by us in our advanced area. Click the link below to book a call if you want to be part of our community and learning and getting your doctorate, your practical doctorate on price behavior like nobody else can give it to you from someone who really, really pays attention to price behavior. And that is us. And that's why we sometimes feel we need to correct a little bit of inaccuracies we see there. There's no school. There's no one who's going to chastise anybody, and we're not doing that ourselves. But we like to see accurate prognostications put to the people in the world so that they don't wander around with misconceptions. Okay, so another reason. Inverted head and shoulder, after head and shoulder, all pivoting. One above the level, 37.5, one below coming up 37. This key range around here. You want to have a look at that on an inverted chart. No problemo. Have a look now. There was the original head and shoulder, and now you have this. And you can see this failed to make this key point. This over here failed to make this key point. You have one touch here and now a second. So you have one shoulder and the complex head. And we wait a small rally, possibly, and then you'll do. That rally, this is inverted now, by the way. That rally is the opposite. It's obviously a sell-off on the normal Bitcoin. That's when you get a last chance dip, value dip on your alts that you want to buy. We feel the alts will go earlier into overperformance, not like when you have to wait for Bitcoin and then you wait and you're already 2 months in Bitcoin killing it, and then only the alt run starts with 1 or 2 projects and then everything. We're going to be cutting quicker to the chase, we feel, this time, which is not a bad thing for making money if you know which are the well projects. It doesn't work so great for the likes of BSV and some of the older type tokens, nothing really new, nothing really sexy. It will for the quality alt major projects. It will certainly work for them. So that's your inverted chart. You can see whichever way you look at it, this looks soft, but it could give a little rally. The inverted Bitcoin could give you a little rally. That should provoke your autism and your dyslexia simultaneously. It's essentially a dip on the normal way round chart. It helps to look at chart upside down. Otherwise, you miss things sometimes that you aggressively see. Again, on the volume by price, lower side. Most of the defense and the action is through here. It's not looking like it's clearing out resistance for a shoot out the top, which would of course be a collapse of Bitcoin. So again, that's why we are up. We saw the 3 YouTubers together putting their opinions, and they all feel one more dip, but macro they're bullish. I agree with their macro bullish sentiment, but I will say I think we're almost ready to go. And they don't have the benefit of the COT. Right now, as I speak, it looks like Bitcoin is in fact just starting that potential sell. That'll get people nervous again. It's their last chance to stock up. So which alts do you take? Which alts do you take? So generally, a good one as a base case is fine, Ethereum. But what you want to do is you also want to have a look at the case for against Bitcoin, Ethereum Bitcoin. Just as a reminder, this is where this was a legit left shoulder head. Note, we picked out that 2.9. That is a logical round number that could be neckline. This was a super spiky high vol shoulder. This is more of a flatter rebuilding one. So this could turn into a legit, supporting on a funnel, by the way, previous upside HVF, dare we say. This could turn into a legitimate inverted head and shoulder with an amazing target. And in fact, we've already drawn it. And that person who made the statement would be accurate on Ethereum, not on Bitcoin. Not on Bitcoin. And that was the threat, the possibility of continuation. That would take you back up to 4,071 because you got a low right down here in and around the 1700s. You've got a key level at 2.9. That's a better part of it, 1,200 plus. And now you're going to go through 4,000. That's going to take you back to where you were. Very close to back to where you were at the high points. Let's check it out. See that? That would be a perfect place to rest and then have a bit of a pullback. We could get one almighty big continuation pattern over the whole of summer. So you could ride that mini bull, if that were to become the case, to the upside. Hey, patterns can fail. It's not a contract with 100% delivery. And then you could have an easing, and then we could get a base, and we could go again, and next thing you know, we have a super continuation pattern, rewind, big, big, big push, and next thing we threw 10s, which would be amazing. So Ethereum doesn't look bad. It's one of my stable pairs, but you want to have a look at it, how it'll perform against BTC. By the way, on the short, we also mentioned we were bias Ethereum. You may recall that 4 HVFs in a row and then a head and shoulder. What an idealized call. I closed all those Fs. Targets were run on FBTC. Targets were run. Don't forget this macro target, the 63, 64. That was the super inverted head and shoulder from the 2018 bear. That target was met. You had one more HVF. You got a booster. You needed to start thinking about backing off. You then got a head and shoulders. You should have got out of ETH over there. We shared in our community this head and shoulder draw at the time. After all those targets were made, you could have been biased in your ETH. You had the best part of the run, and then you would have got out. You would have missed this reduction in bet. But it didn't come off too terribly. You know, it stayed above 5. It stayed above 5, which is quite impressive for Ethereum. So Ethereum relative strength has been pretty strong. People haven't over dumped it. So I'm somewhat impressed by that. What you can do is look at all the others relative even to Ethereum. So ADA has big news, I think, coming, and was actually relatively strong during this period. I think you can pick it up a little cheaper, but it is showing some strength. Got a big month coming up, July, August, so watch out with its smart contracts and everything. Perky upsides, and actually compared to its highs, it did have a huge sell-off at its lowest point, traded at 102, up at 245, but it had gone up quite late. This was almost new all-time highs for ADA. I can't quite remember what it did pre-17, 18, but certainly for this bull market. And very strong up leg. So it's showing quite good. It's no worse off than it was, you know, pre the crash. It's pretty much back at those levels. That shows a certain amount of bounce back ability. When you think about the news and the flow and everything that's coming, I think it's going to turn out just fine. So here's one you could look at. So what you want to do is compare it to Ethereum. Because I think we all agree ETH will probably outperform Bitcoin once these things start. And we highlighted this also as a setup, ADA versus ETH, and it bumped out of that. Having a bit of a pullback and a rest now. But overall, this shows net accumulation. I've shown you the ADA ETH chart before. And ADA has carefully taken itself out of a legacy range that it has been constrained in. So let's have a look at that. We put the lines back on. So this is a log chart. We ignore the first listing histrionics, and largely ADA has traded in this band. Let's get a little bit more, that's it, a better view. Mentioned this descending triangle here. It showed that it was going to dip back, but only dip back to the midpoint. This is log scale. That's why it looks a little bit to the high side. Back out on top. So it's broken out of a multi-year range where it spends quite a lot of its time in the bottom half. It was a buy and a long most of the times along the lows. Interesting that that COT indicator gave us a long on that HVF, and it's given you a long now for the first time ever north of the 55 range. So ADA could overperform Ethereum, but you might just be able to get it a little cheaper on a little bit of easing right now because it's just in a pullback leg. So one for you to watch performance wise. A little bit of an easing, but working its way. It's found a new floor, and it seems like it's the ceiling of its previous range, but for that little dip where it touched the halfway mark and went back out. So it's taken value from Ethereum, relative strength, in the more recent time frame. Let's have a look at some of your comments before I keep going. So we've given you ADA versus ETH. We will have a look at Ripple and Uni. What do you guys say? Yes, ADA has some interesting developments over the next 3 months, says Psychedelicide. He's quite right. Elrond will overtake ETH, says Mohammed. Lynn Alden likes BTC. I think she likes crypto generally, and BTC is the primary proxy for that. I think BTC is going to do perfectly well. I just think you can go even faster if you've already been in alts in the first half of the football match. You'll be able to cut to that chase maybe a little quicker. So I'm thinking the best projects, remember, this isn't every single alt. The best project, the alt majors, not the stale, not getting any money ones can overperform. It could even include your meme token of choice that our friend, the control structure kid from South Africa, Elon, might punt. Let's have a look at XRP. So they had a bit of good news on their court case. That was our modeled HVF that failed for us, and it spilt with the Bitcoin. And since then, it's actually got quite nice up legs. So providing Bitcoin gives us what we think it's going to give us on the direction, it doesn't have to kill it. It just has to set up and move up. and go heading for that 42.5, which is an absolute 100% invalidation of the Bitcoin downside. We'll take another look at that before we finish this video, by the way, so we can talk about the invalidation of the risk. The problem is if you wait until it's 100% invalidated, you could be sitting in a pump that's going well past and you miss the opportunity. So I don't wait for over confirmation. We're often early, and that's how we can be wrong. And if we're wrong, we'll be 180 degrees wrong, but we're saying the final low is in. That does allow you that it can still come off a bit, but that whatever continuation structure gets set up, we're calling first in a new trend because of the backing of our COT indicator, the volume by price, the bear pole with knocking out a low for that relative low 2, pointing us back up to the 37Ks. If that inverted performs like the head and shoulder performs, you're going to be back up at 39s and knocking on the doors of 40s and in time higher. If all of that is happening, it's going to be a very benign environment, lots of money on the sidelines, lots of money not committed, that's all got flushed out to come back in to favorite projects. When we look at these up legs for XRP, for example, this is buoyant. You get good structures coming out of it, even if it comes off right now. Yes, it's had some news, but that will give you a great little setup for a bump and push and take you back up to our legacy funnel when we were looking to trade it higher, which never worked out. So that is very, very favorable. Look at it versus Ethereum. If you have your default benchmark, and this is what I was saying to the community guys earlier, you guys have to wait for that opinion, but here it is. That looks like a rounded bottom. So you're in a falling wedge. You had a little first break, you've had your return move, and you've got a rounded bottom and a bit of impulsiveness. Of course, the news would have helped that, but there's always news that drives impulsive moves. This looks like rounded, and you get a little bit of a dip back, and then you go again, and you start to get rounding. So I think this could recover a bit. I think they're going to get a favorable outcome, but I could be wrong. But the charts look biased to optimism for Ethereum. My apologies, Ripple. So what about DOT? I'll go straight to DOT against ETH. Not looking as clear cut. Can you see that? It can come suddenly with a spike. It just looks calm and flat bottomed. It probably will, but it's not something you can rush in. That's highly speculative. It could stagnate while others are doing it. So .eth doesn't show me the same buoyancy. BNB ETH recovered a bit today, BNB, but this isn't specifically aggressively encouraging. It'll probably walk higher at some point, but it could also have one more sell before it goes. So in time, I think BNB might make some ground, but it's not looking like the one. We showed you ADA. So let's pop down to Uniswap. Also not that bad. It was near all-time highs when Bitcoin lost its stuff. Held up okay. How's it doing? Uni against Bitcoin. Very close to its Bitcoin high. So it was up top there. It's recovered really strong. It had a proper washout and it bounced really strongly back. So really it's no worse off. It was near all-time highs here and you're back there. So relative strength has been high out of Uniswap. Let's look at it against ETH. And this was one we gave the guys also, looking like a reversal against Ethereum that has done very well. Very, very nice technicals. 1050 is our neckline for our draw. Shoulder, you could see it sell off. Grind lines spill to the lows. Wind up. Now you've tapped the neckline and you're over here. So that could give you a nice move to the high side. Also given that to our premium guys and accumulate below the neckline. This is all reliant on Bitcoin recovering. Uni could underperform Ethereum if Bitcoin goes down. Good. Let's have a look at what some of you guys have got to say for yourselves. And let's also revisit the Bitcoin, because now you're ready to look at it again with cold eyes and ask yourself the question, will we get a right shoulder here? Are we due to recover? The faith I have in the commitment of traders, which are the insiders, is that the insiders generally aren't wrong. They don't reduce their selling that low if it's about to go down more. They sell even more. They dump. And that's kind of what they did with the head and shoulder structure that we had. Some folk looking at Tron and Litecoin, you see, looking at some of the old school guys, that doesn't mean something good can't happen out of them. A lot of people want Elrond and Neo and OMG. We'll do Elrond because there's a lot of people asking for it, but I'm not sure. I think you're just shouting out your favorite tokens. It doesn't necessarily mean technically you've looked at it and they're right. Take a pass past AAVE actually while we're going there. That's real momentum and smaller pullbacks as well. Dow theory. Higher highs and higher lows. It just needs Bitcoin to do what it needs to do. Higher highs, higher lows. And let's see it on the against Bitcoin. Higher highs and higher lows as well against Ethereum. Also pretty much some degree of recovery. So Elrond, let's have a look if I can locate it for you. Did look at Solano. It's okay-ish. Nothing too noteworthy. It's doing all right, guys. It's doing all right. It will recover with the rest of them. Is it outlier? Let's have it against Ethereum, eGold. Not getting an eGold ETH chart. There's a Bitcoin one. Yeah, okay. Nothing special. They all should recover, but nothing specially about this one. Nothing specially about this one. Litecoin, Atom, Link, all your tokens. You can come and find out about all of those in our community and in our live trading day. Our live trading day is this Friday. We'll look at all of them. We'll be able to answer all your questions. Con live stream on every single token. The key message, let's just summarize and go back to Bitcoin and give you the key message so that you understand what we're saying. If we're wrong, we'll be 180 degrees wrong, as ever, and it is possible, but we're going against the crowd that are saying one more dip. We are saying it for the reasons of the commitment of trader insiders does not indicate that, and has been incredibly powerful and incredibly accurate. The volume by price does not indicate that. Now that we've had enough time, we warned that it was possible while the structure was building. Now that we've had enough time, we've got a proper first and second impulse, we're seeing it. It still doesn't indicate it. Those guys probably don't do volume by price analysis. We made targets just on the head and shoulders. It was a super spike. Just lost that chart. Let's reload it. That was another reason. Inside the structure on lower time frames, we had a little a head and shoulder reversal that's gone in, made its mini target and set up another reversal back up. So that shows we're trading around the level. We're trading around that level, and that level to me looks like the 37 and 35 and a half range, which shows that we're holding a level and the volume by price is right there. How will we be wrong? We'll be wrong with a very strong sell. And when do you know that we're wrong about this and there's a chance that the downside continuation could continue? Quite simply, we'll be wrong if instead of getting a shoulder that dips, say, to the 35,450 or something like that, you run that first low as your first warning. That's at 34,175. And if you run that, then clearly we are going to be a lot flatter bottomed. And that moves us to a structure that then looks more like the 2018 one that I was showing you that we streamed from, and everybody hated on us for saying it's going to go lower. And we made 6-digit sums, shorting both it and Ethereum in this clip. This is under our live streams. It was 11th of November. The 14th of November it spilled. And that was a different, much lower, and all the volume by price ran along the floor generally across most exchanges. So it was knocking for a trapdoor more than it was doing anything else. As a result, the other thing is we've done 55%. It becomes a heck of a sell down to go down to 20 grand. Say you went 20 grand, which some of these guys are calling for in this lower dips, lower 20s from 65. Wow, that means you've lost 45 of your 65. That's about going for 67, 68%. You're heading for a 70% mid-cycle correction, where you actually only hold 30% of what you had at the all-time high, barely over 30%, a third. That also seems too strong. What could happen that nobody's discussed, where we could be incorrect? Well, one of the things that could happen is we have, it starts a breakdown and then fizzles. So it comes down, it triggers this warning level, it triggers that warning level, it goes really low, doesn't run that. We start talking about a continuation pattern, does a week, breaks, makes a marginally lower low, and then just starts pumping. That would be a real bastard of an outcome, because then the shorts don't win because it's not performing to a target. And that's a killer for traders, basically. The longs don't win because they'll be flushed out on the revisit to the downside and taking out these level lows. I'd certainly be out on my bullish bias along that I've taken over here. And you then have to reconsider the possibility of it going down. But if it does then break and then fizzles and starts going up, that's probably the most damaging outcome, because you're not right if you're long, you're not right if you're short, you don't get a targeted outcome. That could happen without even making a lower low. You could do it and just get down here, and then we could run. Or you could make a new low and then recover really strongly. I want to warn you that that has happened on a smaller time frame before. It's less likely to happen on these bigger time frame structures. This is a reasonable size. We're looking on an hourly chart here, and actually I could just as easily be watching it on a 2-hourly and spread it out a bit more. So it's a reasonable size. I'll show you an example where that did happen. You got what we call a look one way, go the other way structure. And that happened over here. Luckily, I wasn't with stops. I was just using collateral, and we called that to be an upside there. But you'll note that the wick traded through the low overnight. The wick traded that through that low before snapping up. But because we had that neckline and we expected that neckline, we were small and I had a no stopper. So basically we were like, okay, it's just an investment position, and that turned out fine in the end. But it's hair raising. Thankfully it was overnight. You wake and see, wow, I got really tested and now it's really running. So you get that final. There's also, that is a scenario that many people are failing to discuss as one of the options. It's not just a simplistic, is it up or down? It could be broadly up after a final little test down on a single spill. So be careful. If you start to say, that's it, my man, the sniper has given me the full green light, get in long, no holes barred, max leverage, to the moon, you could run into trouble, and you want to avoid doing that. But for me, my primary guess is we're going to do this right shoulder. Everything is calming down. Something else you can watch here is the historical volatility. It should be a calming process. We've just come from an exceedingly high volatility event. So as it calms, the moves get less wild and extreme. So we drop it into a lower time frame. You should see that the volatility is reducing. Go back up to an hour. There you go. super spike of volatility into the final throw. That's another key element. How do bearish events die? Often a final capitulation. This was liquidations. I keep mentioning the 770,000 accounts, hoping that as many of you are not part of that number as is humanly possible. But that is often how events die. We call the end of the bull in the bond markets in COVID with a super surge up and then a slap in the face down. And then even though the people bought the dips, the still bulls, that thing rolled over. And for me, it's never returning there in terms of those things. Good. Everyone wants EOS. The lottery is rigged by some Matic, says frankly speaking. Illuminatrix, some dude in my neighboring city won 90 million on the Euro draw. You guys have the lottery right here in the crypto markets. You might not make 90 million, but seriously, if you're consistent and you play the next 3 or 4 years, there's no reason why someone can't make 10 million euros without starting off having hundreds of thousands to waste. There are real opportunities trading here. And generally, you want to do the sitting more. The COT indicator is great. Generally, you should be net long. These are the points where you're a little bit cautious. That's when you should take money off the table. That COT indicator is when I close crypto and I cash out. That key signal will be for me. And I don't think it will be this year end. There was something else I was going to teach you and show you that I think was very valuable. So this is a trading shots chart. So I screenshot it. Full credit to him, actually. So I'm using one of his charts that came from him, and as a result, sourcing him for that. Here's one of the key predictions that I've continued to make, and he's given me a chart that actually validates that view. The cycles are lengthening. The bull cycles are lengthening. Everyone thinks it's an end in December cycle. You may well have another sell-off. You may well dump 35% for a bit, but the cycles are actually lengthening. And the more we get adoption, the more they're lengthening. It's not only about the halvening cycle. The halvening is a very important cycle, but it's not the singularity about this. If you measure high to lows, these cycles were actually quite short in the beginning of crypto. Absolute low in the 2010 to 2011 cycle, July to June 2000. It's less than a year. I'll call it 1 year. 1 in the beginning. So that's from the absolute low. 2011 to 2013. That captures the lowest point to the highest point of that period. June to November 13. So you've now gone June 2011 to 2013 November. That's 2.5. 1, 2.5. Hey, that's not the same. It's not the same time cycle. Time, you've got to think about time cycle. Our method is the only one that has time stops if you haven't run your target or your stop, and it always gets you out at a very beneficial place. So you don't even make your target and get your full R's, but you don't make the loss, and you usually make profit. How many of you have a trading method that does that? So if we then go to the third cycle, November 2013, which was the blow off, December 2017, which most of you know, which was our last high, 13 to 17, November to December, that is 4 years and 1 month. 1 year, 2.5 years, and 4 years. So you seriously think it's all over now at the end of December of this year because last year it was December and the other one was November? No. Yes, you will have another maybe third quarter pullback, but the cycles are extending in length. You are here now on the orange one and you've just had half-time oranges. And the arrows here are drawing, the time frame is lengthening. So what will get you out so that you don't wear a 75% from your all-time high haircut when we have a bearish correction? Well, it might not fall that far. By then, there might be more institutions, there might be more bleed-in money. But what will get you out near the highs? COT indicator. Commitment of traders with the hunt adaptation on those details, which focuses on the top 4 largest bulls and the top 4 largest bears, usually the miners. selling, and they have plenty of information and they are very well informed. So they will distribute heavily when they see it as beneficial and less so when they don't. And the 4 biggest buyers, which will be the likes of Grayscale, insiders, NSA types, and mega whales. And if you think those are the stupid, uninformed people, I've got news for you. The insiders are generally right. And the insiders are buying right now. Our COT indicator suggests that. So don't be caught out. Stack on your new projects, trade the right shoulder return move that's currently happening, in our opinion. If it goes further, you may have to reassess. This is not the time for leverage, that comes later. Get your collateral back in if you were in stablecoin, is our opinion in terms of what we are doing. It's not advice. Okay, guys, thank you for coming on. We had 832 of you watching. I hope you've enjoyed that technical stream. Cycle is extending. It's going to be a bull longer. You're going to get out too soon. The COT indicator is bull. The volume by price shows that we're not knocking on the floor, in our opinion. The shorter time frame patterns are probably indicating some form of inverted head and shoulder right now, and you're probably making the right shoulder. That would be a great time to accumulate on the dip. Your alts, you now have exactly what we think. If you want to be able to have these kind of views more regularly, given to you on a day-to-day basis inside a private community where we have real setups, real learning, and we trade practically the real markets. Remember, the guys that called the short at 6K, we called the short at 14K in 2019. We don't only do longs, we also want to do defense. We want to protect what we've made. It's useful. It's not what you make, it's what you keep. That's both in your trading defense and also in your structures. Don't forget, there is a window open on Panama that will be closing as well. You can find out more. We do that inside our community too as well. Thank you so much for coming on. 819 of you, 404 likes. That's awesome. I don't think voluntarily we've ever had so many hit the likes. We really appreciate that. We put no ads on this channel. It doesn't grow for that reason. So we rely on you saying that was helpful. I'll give it a share to our Facebook, Twitter, or any other media that you do watch. Francis Hunt, the crypto sniper, is getting back in long in Bitcoin. You know the levels where he accepts he's wrong, but we could steal a march on everybody else if correct. We'll see you later. Till then, all the best. Play safe, trade small.